Meanwhile, credit ratings agency Moody's has warned that emerging market volatility will continue for some time. That's largely because the U.S. is pushing ahead with rate hikes. Also, the ongoing U.S.-China trade spat is creating concerns over global growth. Now, investor sentiment lifted slightly after the U.S. suggested that it wants to reopen trade talks with China, but it's still early days. Well, Sumitra Nydoo gives us more on that story.
It's been the longest emerging market sell-off since the U.S. tapering of quantitative easing in 2013. There's been $2.7 billion worth of outflows after Turkey's financial crisis escalated in mid-August. South Africa was the worst hit and is the only country to record a net outflow so far this year.
South Africa has been running a current account deficit, and that comes with certain outflows. It has also been that it had been a recipient of large inflows in recent years. And as investors globally now shift their portfolios, and South Africa, with other emerging markets, has seen then these flows going back out.
There are now fears the contagion might spread. Turkey and Argentina, like many other emerging markets, each run twin deficits and rely heavily on foreign debt.
More recently, what has transpired is that the policies taken, the policy choices, have not mitigated really that reliance and have then raised concerns amongst investors. That is really that shift in policy stance that has driven our downgrade of Turkey.
African countries too, where currency reserves are lower than external debt, have also been caught up in the turmoil.
So countries like Kenya, for instance, I would say Nigeria, Mauritius, Egypt, Zambia to an extent, Ghana as well, will feel a little bit of the pinch. So if you had to choose between investing in emerging markets in Africa compared to emerging markets in Asia, we are still seeing that investors believe Africa's risk is still much higher.
Emerging market currencies will feel the pain of further U.S. rate hikes. The rand has already suffered a 20% loss against the dollar this year.
So yes, we've seen a bit of volatility in currencies over the past few months. Ghana is a very good example. Zambia, unfortunately, with its own domestic issues, but also EM market issues, have actually made that currency quite volatile. So we are seeing the effects, but it's not as big as what we see happening in South Africa.
The depreciation of the currency matters to the extent that it affects the overall cost of debt, and it can affect it directly in terms of foreign currency debt, and it can affect it indirectly in that the SARB might decide to raise interest rates in part to support the currency.
Emerging market volatility eased this week, but with no certainty on the U.S.-China trade talks, volatility is expected to linger. Sumitra Nydoo, CGTN, Johannesburg, South Africa.